Well, I am expecting a much calmer week this week, even though there are a few things that could definitely create some action. We've got Apple's earnings coming out. We got Amazon's earnings coming out. Both of those earnings could definitely cause some interest beyond and above what would be normal. And then, of course, at the end of the week, well, in the middle of the week, we've got the ADP. The end of the week, we've got the Labor Department providing us with jobs data. Those are both coming. I'll talk about those more in just a couple of seconds. There will also be lots of reports of economic health, and I'll talk about those. All right. So, how will Tesla fare? I can tell you that I expect Tesla to continue to be untethered from the market. That's one thing for sure. But then I'll tell you more at the end about what I expect over the next couple of weeks or so. This is Randy Kirk. If you like this channel, you know what to do. Like, subscribe. Tomorrow morning, we will have the regular, after the bell. This program is called Monday Morning because we're talking about what happens next week. And then we have that program tomorrow morning called After the Bell. Hopefully you're watching both of these on a regular basis. And then all week long after the bell continues. And then, of course, you can join Patreon. And right now, if you join Patreon, you get a free audiobook. Your choice, you get to pick. All right. So GM has reiterated that it will double EV production in the second half of this year to 100,000 units. They're going from 50,000 to 100,000 units. They're going to fix the supply chain issues. That's the key to boosting production. They're working through that now. I'm thinking this could be a very hard get for them. 50,000 additional cars between now and the end of the year. That's a lot of product to move in just that 6 months, even though it includes new vehicles. Wall Street analysts say that they will be rolling out the Chevy Silverado, the Blazer, and the Equinox, and that'll show how the EVs are doing beyond just the regular old day in day out enthusiasts. Okay, that's what Wall Street's saying about this. Well, they further project, this is the really hard get. They're saying they're going to add 300,000 more units in 2024. Wow, that would make them. I don't know how they think they're going to move 300,000 additional units next year, but that would be interesting to watch and something that I think we should all be taking a look at. They're going to try to do this with 5 or 6 vehicles, not just with 1 or 2. So they got to advertise and promote every one of those vehicles. They've got to have all of them actually be successful, or if one of them fails, it could just completely ruin. Maybe 2 of them failed. I mean, these things happen, right? Moreover, not sure what the specs are going to be and how the public is still thinking about the whole issue of where they're going to get charged until next year when they start using, the Tesla method. Okay, anyway, let's take a look at these reports that are coming up. We got a bunch of them. I'm sorry that so it's going to be a little bit of a longer show. Okay, starting on Monday, we've got the Chicago Business Barometer. That's a Fed barometer. That'll be coming out. That's expected to be ticking up to 43.3 compared to last month, 41.5. That should be good. I don't think the market's going to care right now. They want to see the economy doing well. That'll be the general theme here. Then we have something that's only happens once a quarter, sometimes even less. Lately, it's been once a quarter, but they have what's called the Fed Senior Loan Survey. Now, that'll be later in the day, so we won't be able to report on that until Tuesday morning. The Fed Senior Loan Survey goes out and talks to the banks about a bunch of banks, I think 40 of them, and they have a questionnaire. They ask them about how the business loans are going, real estate loans are going, and consumer loans are going in terms of, are they tightening, are they loosening? Are people being turned down more, et cetera, et cetera? They've got about 25 questions they ask these banks. And out of that, they come out with a report on those responses to those questions. I'll be reporting on that in depth on Tuesday morning. Once again, we'd be looking for, there's going to definitely be tightening. I mean, I'm expecting every one of those questions to be, yeah, it's tighter out there. Whether the Fed or anybody else or those who analyze it, including me, think that this is looking dangerous to the economy, it certainly could be looking dangerous in the commercial real estate area. All right, so let's take a look at Tuesday. On Tuesday, we got the S&P final U.S. manufacturing PMI. Remember now, the PMIs are the purchasing managers index. So this is how purchasing managers are seeing the future. The street is saying that that's going to come in flat from last month at 49, 50 being like an average. Sometimes it's above 50, sometimes it's below, but right now they're thinking that in manufacturing, it's going to be flat. I'd love to see that one popping up. And there was some evidence last week that manufacturing might be popping up. The Fed won't mind if manufacturing is popping up a little bit, I don't think. Then they have the what's called the job openings index. You've heard me talk about this a lot. Last month, it was 9.8 million job openings with about 1 million people looking for work. No expectation from the street. I don't know, the source that I use apparently didn't get a street estimate on this. I'm expecting this to actually start moving down just a little bit. I'd like to see, I think this will start moving down a bit. I think there's been a lot of fluff in this report. I'd like to see it moving down. Then we get the ISM manufacturing report. That's expected to go up a little bit. See what I mean? Here's a report that they're expecting to go up. Why don't they also think that the purchasing managers would also be thinking that? Construction spending is expected to be flat. Again, we've heard a lot of reports that construction spending might be moving up. So I'm thinking that might be up. But again, I don't think the Fed's going to be too bothered if these are modestly up. All right. Wednesday. That's ADP employment. Now, you might remember last month, ADP employment blew the rock. Just, the numbers were just off the chart compared to expectations at 497,000 new jobs. The ADP numbers are commonly quite different than the government numbers. And in this particular case, it was a lot different, and the market went down as a result. But then 2 days later, we had the government numbers, which brought us back into alignment. Anyway, the street is expecting only 173,000 because of balancing. They're expecting to get back into a norm that's will balance last month's report. All right, then Thursday, we get initial jobless claims. That's expected to be about flat. U.S. productivity. I spent an entire video and a couple of follow-ups to that talking about productivity. Productivity is one of the things that's going to drive inflation down. The more productive we get, and we should get more productive when we don't have all these swings in terms of the supply chains and in terms of the way that people are buying and selling. If things flatten out, things are more normal, it allows manufacturers, wholesalers, retailers, service companies, it allows everybody to concentrate on productivity, and the swings don't cause people to have to spend tons and tons of time, energy, and money dealing with the swings, paying more for freight, etc. Okay, spent a whole video on that. So right now, big difference here, and the Fed will love this. Productivity going from a negative 2.1 last month to a 1.7% increase suggested by the street coming up. That would be hugely positive. Now, I don't know whether the street will see it as hugely positive. I don't know. The Fed should see it as extremely positive because it is exactly opposite correlation with inflation. Okay, the S&P final services PMI. So this will be services purchasing managers index. That's expected to be exactly flat, slightly over 50%. So 52.4, that's what it was last month. The street thinks it'll stay the same. And then the ISM services report comes in also, and that's expected to be slightly down. We did see a little bit of downward pressure in the services area with a couple of other reports last week. So maybe that will be true. Factory orders are also looking to be down in this report from 0.3 up last time to only 0.2 up this time, but that would still be okay. I think everybody will think that's just fine. Okay, then we get to Friday. Here's the big day. This is when all the payroll information comes in, the hourly wages information this year versus last year. What does the street think is going to happen? Well, first of all, they think that non-farm payrolls will be up about the same as last month. Last month was 209. The street thinks it'll be 200. Yeah, I don't have a number on that. I'm not ready to say. The U.S. unemployment rate staying at 3.6%. That's probably a fair guess. Hourly wages going up 0.4% again. Hourly wages year over year, 4.4. I think that could be a surprise on the downside, which the Fed would like. And that might be my optimism. But I think I'm still hearing people talking about not being able to find employees, but I am not finding so much energy in raising wages in order to get those employees. All right. Next story. 2 House Republicans and about 20 members, other members of Congress. I don't know, this report was not very convincing in terms of the way that they did their analysis, but it turns out that about 25 members of Congress drive electric vehicles. That's according to Politico. 25 out of 435 members of Congress. Come on now. That is just 6% of Congress is driving BEVs. These are people who can afford a Tesla. They can afford a BEV. 6%, 25 out of 435. Out of the 12 co-sponsors of the current Senate version of the Green New Deal, which is a progressive resolution that includes investing in EV infrastructure and making EVs more affordable, only one, Jeff Merkley of Oregon, a Democrat, had an electric vehicle. One member of the Green New Deal Committee. Are you kidding me? This is what I've been talking about all along. If you're going to talk, walk. You got to walk the walk. I mean, holy mackerel, Congress. If you think that, I don't know, you get it, right? I mean, hypocrisy times 27. All right. Well, the pre-market is mixed, but slightly up across the board, all the way across. I had to do this a little early this week, so I can't give you anything on bonds or oil, but oil was over $80. Don't like that at all. Hoping that comes down. And then let's talk about Tesla. Oh, and by the way, bonds were just under, the 10-year is just under 5%, under 4%. I'd like to see that. I think it will start to creep down. I'm not sure, but I think that'll start to creep down. All right. What about Tesla? I continue to expect Tesla to continue the move upwards back to 300. I have high confidence in that. There is a resistance at 275 and at 285, and then, of course, a huge resistance at 300. But I do expect that to happen. I would say over the next 2 weeks, probably we get back to 300, all things being equal. If we break through, there's no actual resistance between 300 and 400. Now, I'm not a technical analyst. I don't spend hours and hours trying to figure out all these different methods of doing technical. This is kind of a combination of looking at a bunch of other technical analysts and my own kind of gut that I've developed over the years. So don't follow me. I am not a consultant. This is not financial advice. If you're interested in what I have to say, great, and then go do your own homework and figure it out on your own. But here's what I think. I think we will have a very hard time getting past 315. Don't ask me why. There are some technical analysts who have also pointed to that number, but it's also, I don't know, there's just something about, we're not going to get to 350 without news. Okay, we need news to get to 350. I think it'll be 315, and then we'll bounce back and forth. We'll go back under 3. We'll be back up to 315. That's what I think is going to happen. That's all I've got. Also, some people have been asking me about my Tesla. I own a Tesla. My wife, actually, it's her car. We have a Model Y. Yes, I do have Tesla stock. Yes, I do have Tesla Leaps. Yes, I do have ARK K stock. And I just bought some more Tesla, some more ARK, and some more Leaps last week. But my powder is now dry. Oh, I've got a little bit, I guess, but it's this much. So that's where I stand in terms of my own holdings. All right. So if you liked it, hit the like button, hit notify. I'm going to have a bunch of guests coming on this week. They've all been off doing stuff, so I haven't lined them up yet to tell you when exactly they're going to be coming on, but I'll probably have at least 4 or 5 interviews this coming week. And then, of course, you want to be here tomorrow morning at approximately 10 past 7 California time to hear the After the Bell report. All right, buy the books, or get them for free. Get the audio version for absolutely free. All you got to do is sign up for Patreon. If you do the 7-day free trial, then you got to wait until the free trial is over and you actually move into the paid portion of your membership. Then you'll be able to get the audio version. All right, that's all I got. It has been great talking to you.